I want to tell you about a couple I worked with last year. They bought a 1-bedroom condo in 2021 for $680,000. They're proud of it. They told their parents, they told their friends. This year, they needed to sell. They were having a baby. They wanted to move into a townhouse. We listed it at $579,000. It sat for 47 days. They sold for $548,000. After land transfer tax, legal fees, realtor fees, and mortgage penalty, they walk away with less than what they put in as a down payment. 4 years gone. Now here's what kept them up at night. And I'm betting it's keeping you up at night too. Is this the bottom or is there more pain coming? In this video, I'm going to show you 4 data sets that tells you exactly where Toronto prices are likely to go next. Some of these numbers are going to shock you. And I'll tell you at the end of this video who should be buying right now and who should be waiting. And stay with me because the 4th chart is the one that nobody's talking about and it changes everything. So let me show you where Toronto prices are actually right now. In this graph, I'm showing you home prices from the peak to the present. It includes the composite and the condo market. So composite includes all property types. And this number is usually what you see in the headlines. So back in 2022 of February, that was where the peak where prices were. We're a little bit over 1.3 mil. That's including all properties. As of today, February 2026, we're just slightly over $1 million. That's a 24% drop from the peak. And when you're looking at dollar for dollar, that's over $300,000. That's significant. But the one thing that they don't really advertise in the headlines is the condos. Condos are the ones that are really affecting the composite price right now. Because if you look at condos, they peaked in 2022 with everything else, slightly over 800,000, and now they're down to the average of condo prices are slightly over 600,000. That's when you look back in time, that's back in 2019 numbers. That's about 7 years back in terms of increases. All these increases, depreciation, gone. You can see how condos are affecting the market completely. So condos have dropped really hard in the last few years, back to 2019 numbers. So let's look at some data. No opinions, look at data. Because I have 4 charts to show you. The first 2 will give you a range of where prices could fall. The third one is a chart that could scare every condo owner in Toronto right now. And the 4th one, coming up near the end of this video, is the one factor that could stop the bleeding entirely. And you need to see all 4. So let's look at chart number 1. So in chart number 1, this is Toronto price history from 1985 to current time. You see in 1989, back then, that was the peak. The peak of properties where the average price of a home was $273,000 back in 89. What followed after that was 13 years of flat or declining prices. You can see like there wasn't much appreciation for this segment over here. So people that bought in 1989 did not break even until about here, which is 2002. And you adjust our inflation, some economists put the recovery date almost to over here, 2011. Now, I'm not saying 2026 is 1989. The fundamentals are completely different. There's different population, immigration is different, land supply is definitely different. But what I'm saying is that cycles do exist, and we are in one right now. So the question is where we are in that cycle. Let's look at chart number 2. So chart number 2 is the price to income ratio. And this is one of the most important charts you're going to see. In the 1990s, the average Toronto home cost about 5 times the average household income. And then we look at 2015, that ratio hit to like over 10 to 1, to 10 times the average household income to buy a home. And in 2022, that peaked to 14 times. 14 times. So you can see the affordability is completely skewed during that year. And today, with prices down and income slightly higher, we're seeing about 11 to 1. So for context, 11 to 1 is still considered extreme unaffordability by global standards. If that ratio were to fall back to 2005 levels, like 8 to 1, the average Toronto home would need to be around $760,000. That's another 27% drop over what we are today. So does that mean we're going to drop 27%? Well, not necessarily, but it tells you the market is not cheap yet. So let me get off the charts just for a second. It's not the price to income ratio. You're thinking, I bought my condo in 2020 or 2021. My renewal is coming up and prices are not where I thought they'd be. Or you're a first-time buyer and you're watching prices fall. You don't know if you should jump in or keep waiting. Let me give you the real picture of what your Tuesday night looks like depending on which decision you make. Let's talk about scenario A. You own a condo and you think about selling to move up. Here's the honest breakdown of what a sale costs you right now. You have to think about Toronto land transfer tax to buy. You have to think about real estate fees. You have to think about legal fees, moving, bridge financing potentially. So on a $550,000 condo, before you even start, you're spending about $45 to $60K already in transaction costs alone. If your condo hasn't gone up by at least that amount since you bought, you're selling at a loss in real terms. For most people who bought between 2020 and 2022, the equity is not there. The real estate ladder is broken right now for that group. Here's scenario B. You're a first-time buyer watching the market fall. I hear this every week. I'm waiting for the bottom. Here's the problem with that strategy. Nobody rings a bell at the bottom. You only know it was the bottom 6 to 12 months after it happens. But here's what I asked you. What's the actual cost of waiting? Let me share my screen with you. So let's say you're paying $2,400 a month in rent for a 1-bedroom and you wait, let's say 18 months. So after that 18 months, you spend about $43,000 with zero equity. And let's say prices drop another 5% during that time. So that's essentially on a $600,000 condo, about $30K. But you spend about $43,000 in rent to avoid it. So the math doesn't always work in your favor, waiting as long as people think. So this is the cost of waiting, you can see. So essentially, you waiting, you actually you're behind about $13,000. And coming up, I'm going to tell you exactly which type of buyer should be moving right now and which type should hold off. But first, let's look at a third chart. This one is specific to Toronto condo owners or condo townhouse owners, and it's the one that's caught me off guard. So this is the Toronto condo supply overhang. And this chart I was mentioning, this is the one that matters most for anyone in Toronto that owns a condo or condo townhouse. So active Toronto condo listings are at levels you have not seen in over a decade. The bars over here represent how many condos are on the market, these active listings. And when you're looking at supply, inventory is up over 60% year over year in some submarkets. So that's, at the same time, here's the other thing that we got to think about as well. The pre-construction projects that were sold in 2019, 2020, 2021 are completing right now. These are where all the cranes that you saw for the last few years, those are coming into completion. And so that means that thousands of new units are hitting the market as investor-owned units get listed for sale or rent. And rental rates over here have dropped, as you see. In some neighborhoods, I'm seeing rents down by 15 to 20% from the 2022 peak. That means investors who are barely cash flow neutral are now losing money every month. Some condo owners will hold, a lot will sell. What's happening right now is that because there's more supply, weaker demand, and that equals continued price pressure on condos, downward pressure that is, not upward. And this is why I think the condo segment has further to go before it stabilizes. So let's look at chart 4. Now here's the other side of the story. And this is the chart that gives me confidence that Toronto is not headed for a 30 or 40% collapse. Canada is in the middle of the largest intergenerational wealth transfer in history. There's going to be over a trillion in wealth is expected to pass from baby boomers to younger generation over the next decade. And that number grows to 4 trillion over 20 years. In Toronto, I see it directly in my business. A lot of the first-time home buyers I'm working with right now in the last 2 years have received either a down payment from their parent or inheritance. And that money is going to housing. And that's what's going to create a floor. And on top of that, a large percentage of Toronto homers carry no mortgage. That's significant. They bought before 2010 or 2015 at really low prices compared to where they are right now. And they're not forced to sell, and they can wait. What happens is true price collapse requires forced selling, which is maybe happening with condos, but does not affect freehold homes. Toronto is actually not there. And Toronto arrears remain historically low. Even though there has been some arrears happening in the last little while, they're not significant. So what you have is a downward pressure from condo supply and weaker demand. But it's held up by equity-rich long-term owners and family wealth transfer. Does that mean prices go up tomorrow? It means the floor is closer than the bears think. So who should be buying right now and who should wait? I'm going to give you the direct answer. And this is what I tell my clients too. Buy now if you need space because your life is changing. Baby's coming, parents moving in, families growing. And your timeline is not the market's timeline. And you need to move, and waiting is not the real option for you. And you're targeting like a detached or semi-detached home or townhouse in a stable neighborhood with at least a 10-year horizon. That segment has held better than condos, and your long hold period protects you from short-term price risks. And you have a real down payment, stable employment. You're not stretching to qualify. This market punishes people who overextend. Wait if you're buying condo as your first home with a plan to sell in 5 years and using that equity move up. That strategy is broken right now. The data does not support it. You think about buying pre-construction, the risk on that segment is still elevated. Completions are flooding the real estate market. Financing risk at occupancy is real. And you're trying to time the market to the month. You'll burn yourself out and miss the window when it comes. And if you're in the middle, meaning you own a condo and you're not sure whether to hold or sell, answer depends on your specific numbers. Your purchase price, your remaining mortgage, your carrying cost versus rent. Those numbers tell the story. The Toronto market in 2026 is not a simple buy or don't buy question. It depends on your property type, your timeline, your equity position, and your financial cushion. If you're still trying to understand where you fit, watch my next video. I'm going to walk through 3 specific situations that Toronto buyers and owners are dealing with right now. A condo owner who feels stuck, first-time buyer sitting on the sidelines, and someone trying to move into a freehold. I'll give you a clear path for each one. Thanks again for watching. See you soon.